Greetings everyone, my name is Cedric Chuuma, here for the FIZ Show Season 2 Wealth Management Series, and I am joined once again by Carrick Zambia Managing Director, Carmen Hachandi. Carmen, glad to have you.
Thank you, Cedric. I'm happy to be here. It's always a pleasure.
Yes, so today we continue our discussion on wealth management, but just for the viewers, maybe you could tell us, what does wealth management mean for Carrick Zambia?
Sure. Thank you so much for that introduction, and good day to all you viewers out there. I'll just quickly talk a little bit about Carrick Wealth. So we are located in the Standard Chartered building on the first floor. But why Carrick Wealth and why wealth management? So Carrick Wealth, a regulated entity, regulated by the Securities and Exchange Commission, and has over 150 years of combined experience in investments from a regional perspective. And why offshore? You may want to know why we are talking about offshore wealth management. It's the tax benefits that come with it, the capital preservation aspect of investing offshore, the growth that will be you will earn as a result of earning in offshore, of investing in offshore assets, and the diversification aspect of it. So when we talk about wealth management and why offshore, we're looking at what are the inherent risks in the local markets. I have spoken about previously the fact that as Carrick Wealth, we've identified a number of risks that are inherent in the local markets. And these are your constant inflation, that's 10% year on year. And for the last 50 years, on average, you have 10% inflation in local markets, in Zambia specifically. And currency depreciation, 10 to 11% also the last 50 years. Not to mention political risks that I think we're all very well aware of and alive to. These are things that can happen in most jurisdictions across Africa. Political risk is a huge element that is a deterrent to our investments. I did speak about compound interest and how that impacts your ability either to earn or to lose the value of the wealth that you're creating. Talking about creating wealth, I'd like to distinguish the two main principles on which wealth management should be approached, and that is wealth creation and wealth preservation. These are two very distinct aspects of investments. So what you do here on a day-to-day basis, what we are calling wealth creation. Going for work, earning a living, investing in businesses, running your mobile money shops, taking part in your farming activities, your village bank, investing in assets locally, from property to your Lusaka Stock Exchange, your Government of Zambia securities. These are what we're calling wealth creation strategies. Wealth preservation, on the other hand, is the wealth I've created. How do I ensure I retain its value, grow its value, and be able to pass it on to future generations? Yeah. And therefore, it is very important for us to know the distinction between creating wealth and preserving wealth. So our wealth management is focused on how do we help 100,000 African families preserve the value of the wealth they're creating? How do we ensure that our country grows from a low-income country to a middle-income country? We do that by ensuring that you're able to preserve the value of the wealth you're creating. And these preservation strategies, I think we began to speak about some of them. Cedric, you'll agree with me. We talked about the US dollar life cover. Yeah, that starts at $1 million that you can access through Carrick Wealth offshore. We also spoke in the last episode about UK property and how you can invest in a UK property to be able to preserve, grow, and diversify your wealth. I would like to touch on a few others today, including residency and citizenship programs that we offer. These are residency and citizenship by investment. What am I talking about really? What is this, and how is it a wealth preservation strategy? So, Cedric, you could decide that you want to create sustainable wealth for your family by diversifying the jurisdictions in which your family will be able to do this, yourself and your family. If there's a business you're running today, you could decide, okay, how do I expand into Europe, for instance? How do I expand into other areas in the world where they have more stable markets, where core inflation is 2%, for instance, for the last 50 years, as compared to 10% in developing countries? You can then invest some money in certain jurisdictions, what we're calling residency and citizenship programs, where you invest money in either a property, a government security, a business. Each jurisdiction has got its own laws, its own methods on how you can invest. Once you've invested this money, it then gives you the right to become a resident or a citizen of that country without you necessarily having to relocate. You don't have to move. You continue to do what you do here, which is your wealth creation strategies, which we've all agreed that there are opportunities to create wealth in Zambia and in Africa. And that is why we're seeing a lot of interest from offshore investors as well to come into our countries to create wealth. They are also looking to create wealth. So you do your work here, create the wealth, but you invest elsewhere as well. You diversify. You go across jurisdictions to mitigate political risk, to mitigate inflation, depreciation. So once you've invested in these countries, you now have the right to become a citizen. They'll give you a passport of that country. And that passport, what it does for you is it opens doors, gives you access to go and work, live, access medicals, invest in that country, do business in that country. But not only in that country. For instance, if you invested in a citizenship program in the Bermuda Islands, this is your Grenada's, your Antigua. If you invest in those jurisdictions, you are also getting access to over 100 countries across the world. Your passport that you hold in these islands gives you access to many other countries where you can also go work, live, and do a lot of things and invest. You could also invest in European residency programs and citizenship programs, which then also give you access to the medicals in those countries, the ability to create a business there and earn a living there. But also for your children, you remember we're talking about generational wealth. You are now giving your children access to go and live, work, go to school there, do business there. You're opening up opportunities for your children to access a different level of wealth creation as well. So they can now go and create wealth in these more stable markets. Not only is it an issue of creating wealth or a job or education purposes or medicals, you can actually also enjoy the tax benefits of some of these jurisdictions when you set up businesses there. So those are some of the things that we're bringing access to as Carrick Wealth to our clients to be able to invest in offshore. So these are called residency and citizenship programs by investment. So you're not going through immigration route. It's not an immigration program. It is an investment that will give you returns in due course. I would also like to talk about education and retirement planning specifically. These are investments in mutual funds, in platforms, in offshore markets that gives you access to an array of investment opportunities. So you could invest in things like structured notes, which are your fixed income paper, equivalent, maybe you can call it equivalent to your government of Zambia bonds here. So you're getting a fixed coupon payment, fixed interest payment every quarter. They don't call them coupons. And in the end, you get your full interest, right? So you have access to fixed income. You have access to equities, which is your, for instance, your Lusaka Stock Exchange, but in foreign markets, foreign companies that are listed, that you can see the performance of. And of course, as we select what these asset classes are, we have our team of experts sitting in the linked asset management under Carrick Wealth that will read the markets for us, do their projections, direct the custodian of the funds on how to deploy these funds. So we've got experts that I mentioned earlier with over 150 years experience in investing and selecting stocks and structured notes and all these things. And that is why we're then able to return growth to our clients. We talked about capital preservation, but we're also talking about growth. There should be growth in the investments that you're making. Other than your education and retirement planning, you can look at a very key aspect of being a UK domiciled individual. Who's a UK domiciled individual? Anybody whose father was born in the UK. If your father was born in the UK and you now live here in Zambia or anywhere else in the world, you are subject to UK inheritance tax of over 40%, which is a lot of money. So in essence, if you died today and your children needed to either claim your property in the UK, claim your pension, or any assets that you might have, your children need to fork out 40% of the value of that asset in pounds to the UK tax authorities to be able to then transfer the title or the asset into their name. That's a huge chunk of money when we're talking about wealth management. And therefore, we are able to help such citizens, such UK domiciled people. It's very, very difficult to lose your UK domicility. Sometimes it doesn't even matter how long you've lived in another country. You may have a little bit of insurance, medical cover that you access. As long as that is the case, and remember, you're now dead, it's very difficult for you to prove that your intention was to stop being a UK domiciled individual. Yeah, in the end, almost everybody eventually pays this tax. We are able to help you remove these assets out of the UK financially and put them in a jurisdiction that is tax-free. Not only that, we're looking at corporate structuring. When we talked about US dollar life cover, you asked me whether that was for individuals. We said we do it also for companies, for businesses, for partnerships. Corporate structuring is another thing that you can take advantage of as a business, where you can set up an entity in a jurisdiction like Mauritius, which brings you a lot of benefits around tax, efficiency of doing business, because now you've got a business that's been registered internationally. And at an individual level, at a family level, we set up trusts for you to ensure generational wealth and continuity of this wealth. I wanted to also just mention that a colleague of mine, very good friend of mine, I sat down to have a discussion with her around offshore investments. And she said something that was so profound to me that I asked her permission if I can use her line. She said, "You know what, Carmen, I'm tired of being those parents that only leave a name and stories for their children as inheritance." And she said it in Bemba, so my Bemba is not that great, but I think you can, when you interpret it, it's so profound. You know, we leave names and stories for our children. It's time we did something drastically different to be able to sustainably leave generational wealth for our children, their children, and be able to build a lasting middle class.
Yeah. Well, that's quite a lot to unpack and very, very rich. I think you've mentioned something that's very, very cardinal: generational wealth. So generational wealth is a long-term game. It's not just something you think of for just you in that particular moment, but you've mentioned a lot about your children and possibly their children's children. Now, what are the key mindsets that are needed for successful offshore investors in order to build generational wealth?
That's a powerful question there, Cedric. Thank you. So what are the key attributes that, how do you psych yourself up to be able to get into this game of creating generational wealth or preserving the value of the wealth you've created? Really, number one, you have to be able to establish a goal. What is it that you're looking to achieve by investing in these offshore markets? It costs quite a bit of money to invest offshore, so you must have a goal. What is it you're trying to achieve? So it's a well thought out process. I did start in the earlier series when we spoke about how many of our parents, how many people do you know that are 64, 65, that are able to sustainably live a good life in retirement without grandchildren or children pitching in and helping them? So what is that goal? What does your life look like beyond the next 5-10 years when you're in retirement? So if you are used to a life of, you take holidays, you drive a nice car, you're able to maintain your vehicle, you're able to replace your geyser in your home. You want to be able to do these things even in your retirement, without too much of a hassle. So set a goal for yourself. What does your life look like in 20 years, in 30 years? You still want to have good access to medical. You want to have good access to the luxuries that you're used to today, even while you're in retirement. In fact, studies show that you spend more money when you're in retirement because you have so much time. It is therefore very important to start planning today about how that retirement will look like without it being about stories and passing on names. Yeah. But how do I help the generation that's coming after me to be able to start from a different level altogether, different ballgame? We have our kids starting out in business and they already have capital and they're not looking for how do I go and borrow at a bank without any asset? And there's no bank that will give you that financing. So the role is now ours to establish a base for the next generation so that they can then take that base to the next level and be able to pass it on to the next generation. So you set a goal and you want to establish a legacy. A legacy is very important. What is that legacy you want to leave? What are you going to be known for beyond your name and the stories of how you came to be? But we must also desire to drastically want to do something different. It has to be drastic. Change must be catalytic. It cannot be something that is BAU, When I ask my prospects, what are you doing differently from what your father did? The answers are generally, well, I now have 10 houses, I have bonds, or I have this. The risks are still the same. Yes, still, you've not managed the risks. What you've done is increase the value of your problems. Your father had one house, you have 10. In the same jurisdiction. So what we're talking about is being drastic in the way in which we look at managing risk, in the way we look at mitigating the impact of these risks on the wealth we are creating.
I think that's those are very important points you've raised. I think from the points you've raised, there is mindset of goals, being a go-getter, but also understanding what you are going to do differently from the previous generation in order to make the next one better. I think that's one thing that you've raised that's very, very important. And also you've stressed that utushimi is not something that you can actually pass on to the next generation. I think there's quite a lot more to unpack, but unfortunately we've come to the end of today's episode. But we'll definitely look forward to continuing this conversation in our next episode. And thank you so much for coming. And thank you for being part of the Wealth Management series.
Most welcome. Thank you for having me. Always a pleasure.
Right. Thank you, viewers, for being with us in this episode of the Wealth Management series, part of the FIZ Show Season 2. And see you in our next episode and get to know.